All right, so we're diving into Michael Pettis' book, Avoiding the Fall today, which tackles the Chinese economy.
Yeah.
Um, this is a hot topic, so let's jump right in.
Definitely a lot to unpack.
Yeah.
What's interesting is that Pettis brings a ton of credibility. You know? He's a respected finance professor at Peking University,
Oh, wow.
meaning he's right in the thick of things.
Yeah, not just armchair quarterbacking.
No, not at all.
Okay.
His book is basically a big warning siren
Oh.
about China's growth model hitting a wall.
Okay.
The question is, can they shift gears to something that lasts without a major crash?
Well, China's growth has been incredible.
Oh, yes.
You know, it's rivaled the giants, right?
Oh, absolutely.
Post-war Japan, South Korea, even Taiwan.
Yeah, those booms were legendary.
But those booms were fueled by rapid investment.
Right, and that's where things get tricky.
Oh.
They historically lead to imbalances.
Right.
It's like building a skyscraper on a foundation meant for a tiny house.
Okay.
Sooner or later, things get wobbly.
So is he predicting a total collapse?
Not necessarily, but he does use Brazil as a warning.
Oh.
Back in the 60s and 70s, they had a wild economic ride,
Yeah.
followed by a lost decade. It's a cautionary tale.
Hmm.
What's fascinating is that China's model isn't unique.
Really?
It's strikingly similar to the American system of the 19th century, and even Japan's development model in the 1960s.
Interesting.
Both relied heavily on government intervention and subsidies.
So what's the core problem then with China's system? What's setting off alarm bells for Pettis?
The heart of the issue is China's surprisingly low household consumption as a share of its GDP. They're leaning way too hard on investment and exports,
Okay.
which makes them vulnerable.
So why is household consumption so weak?
It's almost like a series of hidden taxes on households.
Oh, okay.
Think undervalued currency, super low interest rates, and wages not keeping up with productivity.
So they've supercharged the economy,
Right.
but everyday people aren't reaping the rewards.
Exactly.
Okay.
Pettis drops some shocking numbers.
Oh.
Household consumption was 46% of GDP in 2000,
Okay.
but it plummeted to just 34% by 2010.
Wow.
That's a huge red flag.
Yeah.
The average household isn't seeing the benefit.
That puts things in perspective.
Right.
So if people aren't spending that much, where is all the money coming from for this massive investment? And what's the downside?
This is where the debt dilemma comes in.
Okay.
All this investment is fueled by an avalanche of debt,
Oh.
and it leads to a misallocation of capital.
Misallocation meaning they're pouring money into things that aren't actually worth it?
Exactly. When the cost of capital is suppressed,
Right.
even smart investors make decisions that don't make economic sense.
It's like a sugar high. It feels great initially, but...
But there's a crash coming. Remember Brazil?
Yeah.
They hit their debt ceiling,
Right.
and the whole system unraveled.
So Pettis doesn't just speak in theories.
No.
He gives a real-world example in the book, right?
He does.
What about China Telecom?
Oh, absolutely. The 2002 China Telecom IPO is a perfect example.
What happened there?
The government wanted a smashing success.
Of course.
So they tried to rig the game
How so?
by raising international interconnection fees.
And that was supposed
They
to...
figured it would boost China Telecom's profits
Uh-huh.
and make the stock irresistible.
I see.
But it totally backfired.
Oh.
Instead of attracting investors, it scared them off,
Really?
especially savvy value investors.
Interesting.
They realized the government was playing puppet master
Yeah.
to achieve its own goals.
So it ended up destroying trust.
Exactly. It sent a clear message
What message?
that market forces can take a backseat to political agendas. It showed the limits of attracting foreign capital without addressing the underlying problem.
Like they took a shortcut that led to long-term consequences.
Exactly.
So what's the solution? If China has this massive imbalance, what can they actually do to fix it?
That's the multi-trillion-dollar question.
Yeah.
Pettis outlines 6 potential scenarios.
6.
Some involve sticking to the current path until it blows up.
Okay.
Others involve radical policy shifts.
Okay.
And still others involve massive privatization.
So there's a whole spectrum of options.
Yes, but here's the catch.
Okay.
Every single scenario requires transferring wealth from the state to households.
And that's a tough pill to swallow politically, right?
You nailed it.
Yeah.
Privatization might be the most efficient solution economically,
Right.
but getting it done politically is a whole other beast.
Right.
Rapid policy changes risk throwing everything into chaos,
Yeah.
and absorbing private debt would saddle the government with a colossal burden.
Oh.
So
Yeah.
there are no easy answers.
Right. It sounds like China's in a tough spot. But before we jump to conclusions, aren't there some people, the China bulls,
Right.
who think they can keep defying gravity and keep this growth going? What are their arguments?
Oh, they're always optimists?
Yeah.
One of their big points is that China is still in the early stages of development.
Mm.
They argue that even with all this investment, China's capital stock per person is still way lower
Okay.
than developed economies like the US or Japan.
So their logic is China has tons of room to grow before hitting that overinvestment wall.
Exactly.
Does that hold up?
Here's where Pettis gets really sharp.
Mm-hmm.
He argues that this comparison is totally flawed.
How so?
You can't just look at raw numbers without context.
Right.
China's still a developing country
Yeah.
with lower worker productivity and wages.
Okay.
Comparing them to the US or Japan is like comparing apples and oranges.
It's like saying a teenager hasn't eaten enough because they haven't consumed the same amount as an adult.
Exactly. And get this, Pettis argues that poorer countries are even more susceptible to overinvestment
Really?
because the returns on investment
Right.
in a developing economy with weaker infrastructure
Yeah.
naturally lower than in a more advanced economy.
Interesting.
He's starting from a disadvantage.
So they might hit that wall sooner than we think.
That's exactly Pettis's point.
Yeah.
And he backs it up with a historical example.
Right.
Remember Brazil
Oh, yeah.
back in the 60s and 70s, despite being relatively poor,
Yeah.
they got hit with a massive debt crisis.
Right.
Triggered by years of overinvestment.
That cautionary tale keeps coming back.
It does.
So even if China's capital stock per person seems low,
Yeah.
it doesn't mean they're immune
No, not at all.
to those dangers.
Exactly. And Pettis doesn't stop there.
Oh.
He digs deeper into how China's economic system actually incentivizes this reckless investment.
Let's hear it.
So we've touched on this artificially low cost of capital,
Right.
which lures investors into projects that wouldn't fly in a free market.
Yeah.
But Pettis shows how China's system distorts who benefits and who pays the price,
Okay.
encouraging this investment spree.
Break that down for me.
Imagine this. The benefits of a big investment, like higher growth,
Okay.
mostly go to the local area where it happens,
Okay.
but the costs, often in the form of debt,
Right.
get spread out across the national banking system.
So it's like throwing a giant party and sending the bill to someone else.
Exactly. And then you've got the whole time dimension.
What do you mean?
The benefits of investment are immediate,
Okay.
but the costs, those debt repayments,
Right.
can be kicked down the road for years.
It creates a short-term focus.
Exactly.
Yeah.
A complete disregard for long-term risks.
No wonder Pettis is worried.
He is.
Mm.
But there's another layer to this
Okay.
that gets to the heart of how financial markets work.
I'm all ears.
Pettis explains that in a healthy market,
Right.
you have a balance of different types of investors.
Okay.
You've got your value investors focused on long-term profitability.
Right.
Then you have the speculators chasing short-term price swings.
Uh-huh.
And then you have your relative value traders
Yeah.
exploiting price discrepancies.
Okay.
Each type plays a role in ensuring that capital is used wisely.
That's like a balanced ecosystem.
You got it. But here's the problem. Pettis argues that China's investor base is too heavy on the speculators.
So it's a system dominated by short-term thinking.
Exactly. And the reasons are fascinating.
Lay it on me.
It boils down to a lack of reliable information and a ton of uncertainty.
Okay.
This makes it impossible for those long-term thinkers
Yeah.
to operate effectively.
So it's not just that there's bad investment.
Yeah.
It's that the system makes it hard for good investment to
Exactly.
take root.
Pettis highlights several things fueling this lack of confidence.
Like what?
You've got poor data quality,
Right.
opaque corporate governance,
Okay.
and constant government meddling.
So it creates an environment where speculators thrive.
And value investors run for the hills.
I see why this isn't a simple fix.
Right. It's not just tweaking policies.
It's a systemic problem.
Exactly. And to illustrate this point, Pettis brings back that China Telecom IPO.
Oh, yeah. Remind me how that played out.
So the government desperately wanted a successful IPO.
Yeah.
So they intervened by raising those international interconnection fees.
Right. They thought that would.
They thought it would boost profits
Right.
and make the stock a hit. It was a total disaster.
Oh.
It backfired spectacularly.
How so?
Instead of attracting investors, it spooked them.
Huh.
Value investors saw right through it.
Yeah.
They realized the government was willing to manipulate the market.
To achieve its own goals.
Exactly.
It was a major blow to trust.
You said it.
Mm.
It sent a chilling message
What message?
that in China, political calculations trump market forces.
Hmm.
It showed the limits of attracting foreign capital without addressing those deeper issues.
A classic case of short-term thinking backfiring.
Exactly.
Yeah.
This example underscores Pettis' point
Yeah.
that China needs to address this investor base imbalance.
Okay, we've covered a lot here.
We have.
And it's pretty heavy stuff. Does Pettis offer any glimmer of hope?
He does lay out some possible scenarios for rebalancing,
Okay.
but he's a realist.
Yeah.
He doesn't sugarcoat the challenges, and that's what we'll dig into next.
Okay, let's get into those scenarios. Pettis outlines for rebalancing. We've talked about how China needs to shift wealth
Right, from the state to households.
to boost consumption. So what's his first scenario?
The first one is what we might call the do-nothing approach.
Okay.
And as you can imagine, it's not pretty.
Yeah, that sounds like kicking the can down the road until it explodes.
Exactly. China just keeps piling on more debt
Right.
until they hit their limit,
Yeah.
like maxing out all your credit cards.
So then what happens? A hard landing.
It's the worst-case scenario.
Yeah, sudden collapse, skyrocketing unemployment.
Not good. So let's move on to some more proactive options.
Okay.
Scenario number 2 is rapid policy changes.
Meaning?
They reverse those hidden taxes we talked about.
So let the currency appreciate, raise interest rates, boost wages.
All very quickly.
Like economic shock therapy.
It could work, but Pettis points out some major risks.
Like what?
Drastic moves could trigger a wave of bankruptcies.
Oh.
Imagine the instability,
Yeah.
not to mention the potential for unrest.
It'd be like slamming on the brakes at full speed.
Exactly. You might stop, but the impact would be brutal.
So a more gradual approach might be better.
That's scenario number 3.
Okay.
Slowly reversing those transfers of wealth over time.
Sounds more manageable.
It's a more controlled descent.
What's the problem with that, then?
It prolongs the pain. Like a toothache you try to tough out
Huh.
instead of going to the dentist.
Yeah, I see.
The longer you wait, the worse it gets.
And it gives those in power more time to resist, right?
Exactly. They'll dig in their heels. Now, scenario 4 gets interesting.
Okay.
Pettis brings up privatization.
Ah. So this is where they sell off those big state-owned enterprises.
That's the idea. Give people an ownership stake.
Right.
The money from privatization could be used in all sorts of ways.
How so?
Reduce debt funds, social programs, even distribute it to citizens.
That sounds promising. What are the challenges?
As we've discussed, it's a political minefield.
Of course.
Those in power would be giving up control.
Right, like giving away their most prized possessions.
It would take a lot of political will.
So what about scenario 5?
Scenario 5 involves the state absorbing private debt.
So the government takes on those bad loans, cleans up the mess.
Pretty much. It's what Japan did after their bubble burst.
Right. But that led to a mountain of debt for them.
It did. It doesn't really fix the underlying problem either.
Yeah, it's more of a Band-Aid.
Exactly.
Okay, we're down to the last scenario. What's the final suggestion?
He proposes slashing investment
Okay.
and then using government funds to hire unemployed workers.
So a massive jobs program.
Exactly. Like the U.S. during the Great Depression.
Right.
It could cushion the blow and prevent unrest.
But it's not a long-term solution.
More about buying time.
Right. And the key is how they'd pay for it.
Yeah, if it's deficit spending, it just adds to the debt.
We're back to that same fundamental issue.
It seems that way. The bottom line is rebalancing will be painful.
Yeah.
There are no easy choices, and it likely means slower growth.
So it's not if China will rebalance, but how.
Exactly.
Yeah.
And how much pain they'll endure.
Right. Pettis ends the book with a question that goes beyond China.
He does.
He asks if their miracle was built on suppressing wages.
Yeah.
What does that mean for the rest of us?
It's something to think about.
Definitely food for thought.
Yeah.
Well, this has been a really insightful deep dive.
It has.
Thanks for walking us through Pettis's analysis.
My pleasure. It's complicated but important to understand.
Absolutely. And to our listeners, thanks for joining us on this deep dive into the Chinese economy.
It's a fascinating one.
We encourage you to keep exploring this issue. There's always more to learn.